Hello, everybody. How y'all doing today? This is Tony Alvarez, and as always, like every week, it's been a couple of weeks since we've been here, but we're back. Here with my good friend and mortgage expert, Andy Gagliano. Andy, how well you doing today?
Hey, Tony, I'm very well. How about yourself?
I'm doing good. I'm doing good.
Good.
The only thing is this heat and this humidity and this crazy weather, but this is Alabama for you.
It is. You're right about that. At least a couple of weeks ago, we broke that dry spell that we've been having. And so we're starting to get some rain now. That's a good thing.
Yeah, it is a good thing, definitely, but also makes humidity go high.
It does. It
I'm, I'm
does.
I'm telling you, if I could, I'll move to Alaska. If I knew I had business over there, I'll be in Alaska. I wouldn't mind.
I'm with you. I like the cold weather. Now, my wife would not, she would not be happy about that. And, you know, for for a while, she tried to talk me into building a sauna. I'm like,
Oh
we live in
God,
Alabama. Walk outside.
exactly,
There's your
exactly.
sauna.
That's good. Well, Andy, this week, let us know what is going on with interest rates. Especially, I'm curious. Today is Monday. What you seen, or if you've seen anything happen today,
Yeah.
uh, change from let's just say like 3, 4 days ago.
Yeah. Yeah. So Thursday of last week, we had a big economic news release for the core CPI, which is the Consumer Price Index. So that really gives us a measure of inflation and what's going on with inflation. And the core CPI is the inflation rate without the fuel and food components being factored in. So it's considered to be a little less volatile. Now, we all know that we can't operate without food and fuel.
Correct.
So those things still affect us a great deal, but they are volatile over on a monthly basis. Those prices do fluctuate a good bit. So without that fuel and food components being added into the index, the inflation numbers actually came down a good bit from the previous month, from June. I'm sorry, from May. So the bond market really liked that news. They've been hoping that we would get some positive inflation news for months now. We got it on Thursday. The bond market rallied a good bit. It was a good day for rates, for mortgage rates. They came down some. We broke out of the trend in rates that we've been stuck in for, gosh, months. So,
Months.
we've
Yes.
been in that rate range, high, low, but we just haven't really broken out of it. And so we broke out of it to the low side on Thursday. And I think maybe we're in a new trend of rates starting to go down a little bit, but this will be the telltale week. So this week, we don't have a whole lot of big economic news being released. We do have retail sales that'll be coming out this week. But the reason that this is going to be a telltale week for the bond market and for mortgage rates is because if rates start to trend up and we hit that old, what used to be the floor on the rates before we broke out of that trend, we were at a floor and the rates would never drop out of or below that floor. Well, now that floor is the new ceiling. So if as long as rates don't come up and bump up against that ceiling and they continue to be either flat or continue a downtrend, I think we're going to be in really good shape. We're not starting the week off in the best manner. Rates are starting to inch up a little bit, but that doesn't really mean anything, just for one day. So this will be an important week to kind of give us an idea of what's going to happen, at least over the next 30 days with interest rates. And, you know, keeping fingers crossed and saying some prayers that they continue to to go down or even stay flat at this new lower level that we're at now. So,
Do you
start.
think that we might see the five in it this year, at least this year? Because
No.
what I was talking with somebody the other day, and they were telling me that if we ever see the 5%, or the 5.7, 5.9, whatever, below six, let's put it that way. Uh, if we ever see it, it might happen probably the fourth quarter of next year.
I think it's going to be a while. I think a year is not out of the realm of possibilities at all to get to see rates down below 6%. Right now we're in the upper sixes. If for someone who has good credit and a large down payment, we're in the upper sixes, and that's with no points, no discount points, no origination fees.
Correct.
So, I think we can continue this trend. What we've seen happen over the past, oh goodness, I would say 6 to 8 months
Hmm.
is we've gotten a couple of false alarms when it comes to inflation news. We've had a month where the inflation data came out and was lower than expected, and the mortgage rates rallied. And when I say rally, I mean they dropped. And then the next month, the inflation news came out, and bam, it's back up higher than expected. And that really has thrown the bond traders for a loop, and it caused the interest rates to go up because of that higher than expected inflation data. And so what we're seeing right now is a lot more of a conservative approach by the bond traders to this economic news. And what that means is we've seen rates come down. We could see rates come down some more, but it's going to be a slow, gradual decrease. It's not going to be anything very drastic or very quick to happen on the downside. So we're seeing some cautiousness by the bond traders, and that's being reflected with slowly dropping interest rates.
Slowly, surely, but slowly,
Yeah,
slowly but surely, something like that.
yeah, yeah. And
Now,
that's not a bad thing, Tony, because when we have very volatile rates, even when rates are volatile and they're going up, that's a bad thing for not just for us, but for buyers, because it makes it hard for them to be able to lock an interest rate in and even to go get approved and know, hey, I'm approved for a $250,000 mortgage today. And then in a month, rates have gone up 0.5%, and they're not approved for $250,000 anymore. They're approved for maybe $220,000 or $230,000 because those interest rates have gone up and it's caused their payment to go up. When it happens very drastically like that, it's hard for people to be able to manage those increases. And the same is true with the decreases. And so with them going down slowly is not a bad thing.
no, it's not. Definitely, it's not. And I truly believe it's a good thing to keep everybody in check and everything. Now, let's just say, Andy, if I get approved today, and with the interest rate that I get approved today, just an example, please don't quote me on that, it's 7.5%.
Okay.
And I got approved for $300,000 home. So I'm on the market, I'm looking, and I finally find one 2 weeks later, 15 days later. And that range, I put an offer in it, and it got accepted. But when I send the contract back to you, because you cannot lock the interest rate without a purchase contract being approved, correct?
That is correct.
So if the rate went up, am I going to still be able to be on 7.5? Or if it went up, let's say to 7.8, did that change the whole dynamic?
It does change the whole dynamic. Yeah. So you may not be able to get approved for a $300,000 mortgage at that point because the rates have gone up and the payment has gone up accordingly. And so, unfortunately, that's not uncommon. We see that happen a good bit because, look, it's where we are in this economy that we're in. And I'm not making a statement, a political statement in the least, because we are where we are in the economy and everything is more expensive.
Yes.
Groceries, utilities, rents, everything is more. Clothes, cars, just start naming it off. Everything's more expensive now than it was. And so, because of that, people are having a hard time being able to manage their finances appropriately because our incomes are not keeping up with the prices as they're going up. So, what we're seeing is people are carrying a little bit more consumer debt because of that, which causes that their debt payments to increase. Now we're seeing home prices go up, or not now, but home prices have been going up. And so that causes those mortgage payments to be higher. So people are stretching to be able to buy a home, period. And then they're stretching as far as what they can afford on a monthly payment, they're stretching that to the max. So if we get them approved at 7.5% interest rate or pre-approved at a 7.5% interest rate for a $300,000 mortgage, and that 300,000 is as high as they can go, and those rates bump up to 7.875, then we probably can't get them approved for 300 anymore. Maybe we can get them at 290 or 285 or 280, somewhere in that neighborhood. So we have to get creative at that point. And, you
Very,
know,
very creative. Let me tell you that.
yes,
And
yeah,
not only you guys as a mortgage professionals, also we as a real estate agents, we need to get
exactly.
creative as well and be in communication with you guys.
Exactly. Yeah. And that is extremely important. Having that line of communication between your real estate agent and your mortgage loan officer is key. It can keep a deal together so that it closes, or it can cause a deal to fall apart so that it does not close.
You know, that you mentioned that is that's what a couple years ago, a couple months ago, there were a lot of real estate agents that were showing houses without the proper pre-approval letter. You know,
Hmm.
uh, just how much you think this person qualified for, and we were looking for it. And there were some agents that were gambling on the price, not knowing if that person qualified or not, because they wanted to avoid that situation. They get pre-approved today with one percentage and then down the road with another percentage. It can be because the interest rate change, but also it can be because, like you said, right now it's hard to keep a budget because the way things are going with the prices and everything. And again, it's not a political statement. This is happening everywhere in the world. I was talking to some people from another countries, and they are struggling with a lot of prices too,
Yeah.
especially grocery prices and everything that has to do with agriculture. Now, Andy, things are changing with the new NAR settlement and everything, as we know. Uh, I still think that some people are making it bigger than what really is, but it's just me. Probably I don't understand it, but I want to think that I do understand properly. Now, we're not going to be able to show houses without one buyer's agreement. So they need to sign a buyer's agreement with us. And in my case, and I'm talking about me, Tony Alvarez, if you sign a buyer agreement with me, that means that you are pre-qualified. If you don't have a pre-qualification, you don't have a commitment, you don't have a qualification, I not working with you.
Yeah.
Uh, it might sound harsh, but it's just the principle of not wasting time. And I think that That's when now we have to maintain that line of communication with you guys, with the mortgage professional, and make sure things are working the way it should be. And we make sure that we find that property for our buyers as soon as we can, or help the buyer make the decision to get into that pool, to get into that property and resolve the doubts, work on all that. Because remember, most of the time, this house that you're going to buy is probably not going to be your forever home.
Yeah.
So
Yeah.
I want to stress that out, that, now is very, very, very important for people to know that they need to be qualified, pre-qualified, or get a commitment letter for the mortgage companies.
Yeah. I think that's a great policy to have, Tony. And, to me, in my mind, that helps to maintain your status as a professional, a real estate professional. And that's very important, to be considered a professional in your profession, because you want your peers to know that when you bring a buyer, your buyer's serious.
Correct.
And so that all that does is that helps your buyer out, and it lets all of the other real estate agents that you may be working with on the opposite side of that transaction who are representing that seller, it lets them know that you're not playing around. You're here to do business, and you're doing business the right way. And I think it's a good move. I really do.
Yeah, that's a warranty that we are going to be giving. If I'm representing the buyer, it's a warranty that I'm going to be giving to the seller and the seller's agent, that my buyer is ready to buy. We're ready to negotiate.
Yeah.
So, with that said, I think it's going to be a little bit shakedown with prices. Not much. It's going to be a lot of houses that, if they're not priced right or correctly, then they're going to be sitting there in the market. And a lot of sellers are still thinking that they can get $20,000 more for what they're asking, and there's still going to be a bidding war and everything. It might be some exceptions, but I personally believe that now it's going to be a little bit of shaking in the market, and we're going to be coming and bringing those qualified buyers for the sellers. It's not going to be a speculation. So, Andy, if somebody wants to be a qualified buyer, what number they need to call you?
They can reach me at 205-979-4412. I'm at extension 1.
That is great. And people, remember, you need to qualify. You need to talk to a mortgage lender, not to your cousin, not to your uncle. And probably some people are going to hate me for saying this, not to your bank teller either. Talk to somebody who does mortgages day in, day out, like Andy Gagliano from Gagliano Mortgages. And if you need a great, an amazing, with a big smile real estate agent, you just have to call me. My name is Tony Alvarez, 205-370-3248. And Andy, thank you very much for being with us this week, and looking forward to see you next week.
That sounds great. Thank you, Tony. Look forward to seeing you as well. Goodbye, everybody.